Bitcoin is entering the last stages of the bear market, and in a few months, we're probably going to have the decisive bear market low. So today in this video, I'm going to show you where Bitcoin's bottom is probably going to be, what ranges to expect, and also give you a timeline on when to expect that it'll happen. Because if you get into the bear market at the right entry, you're going to have an easy bull run, and the bear market is really where most of the gains are made. If you get a good entry, you can make easily a 3x in the next cycle. So without further ado, let's get into the charts. So this is the price of Bitcoin. These lines are basically guidelines on how we're doing our technical analysis right now, right? So fundamentally, I think Bitcoin will still probably reach a million eventually. But right now, we're trying to maximize our entry, right? Every cycle that Bitcoin goes in, the bottom is usually the best time to buy, right? Obviously, the bottom's always the best time to buy. Identifying the market cycle bottom, though, is not so simple, right? And probably pretty hard to do. But during the bear market, this is the best time to invest in Bitcoin. So we're trying to try to time when is the best entry right now. Should we go in now? Should we go in later? Right. So this is what we're drawing recently. We drew this top line, which is this top diagonal, which is basically just following the Bollinger Bands, and this actually acts as resistance. You can see it got rejected here, then it got rejected here, and now it's going back up there. And we also drew this support line. So this is the last support line. It's where it bounced, and that's actually where we're seeing these two cross is probably when Bitcoin is going to make a deciding moment on where it's going to bottom, right? So usually when what's happening now is this actually getting squeezed between the support and this resistance, and that's when actually it's going to make a final decision whether or not it's going to break up or down. There are two things to note here. The reason why I don't think this is the bottom yet, and it's probably going to happen later, is because when we look at the days from top to bottom, in the past few cycles, we drew the top to bottom days 51 bars, 51 bars, the other one 60 bars. If we find it, yeah, it's around 60 bars from top to bottom. So usually it takes around 51 to 60 bars for it to bottom. And from the previous top at around October 6th, if we drew 51 bars, that will still give us until October 5, somewhere around October area for when it bottoms. And this actually aligns pretty well with these crossing of these two support and resistance levels, right? So that's one reason why I don't think this is the bottom yet. And if we look at this, it's still kind of in a downtrend, right? We don't see a consolidated base. Usually in cycle bottoms, you can see it hits the bottom support multiple times. So here it actually hit this bottom support 3 times, and even in the bottom here, the next low, it hit it twice. And even in the previous ones, you can see it hits like the bottom almost twice. You see like lower lows, and even in this shelf, there was like multiple times where it hits this support level. We haven't seen that bottoming process play out yet. So what we can see right now is this was the first time it tagged it, so it will probably at least tag it a second time, because in all historical shelves, it usually has a bottoming out pattern in this weekly view. So we're not there yet in terms of the structure of the technical analysis, right? And so what happens now? What happens now is that since we're getting squeezed here, there's gonna be two ways that this will play out, right? So it could go sideways all the way until September 7th. So if you look down here, this is like the price. So it can go sideways from August right now, the week of August 10th, all the way to September, and then hits the line, then it makes another crash down. I do think going down is the more likely situation, because we don't see this bottoming out pattern yet, and in terms of time-based moves, it seems like it's a bit slightly too early for it to bottom, right? I'll show you a bunch of other charts that support this in a bit, but yeah, right now in terms of the technical side, it seems like for August and September, I feel like it'll be slightly negative. And then in September or October, that's where we're going to finally see another big move, probably another big crash to lower levels. So why do I think that there's going to be a bigger crash other than these technical indicators, right? So if we actually look at the price of Bitcoin, this is one model that we've been following throughout. There's other models, but there's two that I want to show you guys. This is the price model. So this takes into account the all historical price of Bitcoin, creates this model of top and bottom ranges, and it just basically tries to figure out where it is in the range, right? If you put back tested, this makes it so that it uses only points of data from the beginning to that point. This basically prevents like look ahead bias, right? And then if you look price risk, we just normalize that value. So instead of it like a trending going up, it just makes it static, right? So this is the chart we've been following as well, and you can see in the price risk level, the lowest price it's saying is 41k, but historically on the back tested levels, it's only like reached 0.2. So 0.2 is around 55, 51k, right? So we're saying that 50K is super, super possible. Like, this is highly likely it'll happen. If we look at this chart, it even looks like there's a slight downtrend bias here. So this will probably hit point 0.2, right? Worst case, it hits $41,000. So if we look at the current model, which is just uses all data instead of the back tested, it kind of looks like this. And this one has historical values now going up to 40K. So 40K is possible in the worst case, I think, but I think we're gonna definitely highly likely hit at least 50K. There are other charts that also correspond to this. So for example, if we look at the realized price and the delta price, this is also another price-based model. So we can just zoom in this area. So here you can see right now we're at 60K, right? The realized price is at 50K, and then the delta price is at 42K. So these are two different indicators that are both pointing to the same thing, right? They're computed completely different. This is like on-chain computation, and the other one is using price computation. But they're pointing to similar levels. And given that we haven't seen a bottoming process here yet in the technical, and given that two of these charts are pointing to a downtrend and lower levels, I'm suspecting that we will at least hit 50K, and 40K could still be in the cards. Okay, now we have an approximate price that we're targeting, 50K or 40K. The question now is, when will that happen, right? I said that it's probably going to happen in the September-October timeframe, right? And I still stick by that. And there's a few reasons why I think that. The first reason why I think that is here, again, I've already guys shown you the drawing the bars. You know, this is kind of dubious, right? It's just like speculation. You're just drawing bars. But it's happened the past 3 cycles. So if these drawing bars things happened last 3 cycles, then it might be possible that the bottom will also happen around this 51 bars, which happens in like October 5th, right? But okay, this is a bit dubious. Do we have other data points that support this kind of time frame? So one way that we're actually seeing that we're gonna reach October-September timeframe is by actually looking at the prices, right? So if we look at it, we're predicting a price of at least 50K, like a 53K here, like 53K, or worst case 40K, right? So 50K or 40K. If we look at from all-time highs, the last all-time high was around 124K. I mean, if we look at all-time highs, the last all-time high was at around 124K, yeah, right? So if we were just to project a 50K price, what percentage is that, right? So if we do a 50K, like 53K over 124K, right? That will give us this, -1. So that will give us a 57% drawdown, right? So we're expecting a 57% drawdown to happen, and at worst case, it'll be like 40K over 124K, which will be around 68% drawdown. So we're looking at a 57% drawdown to a 68% drawdown, right? In order to get the when from this approximate price, what we can do is actually just look historically all the times Bitcoin fell 58% or 68%, right? And then we can average how many days that happens, right? Because actually each point in time, like this point, could have experienced a 58% drop. And seeing as all these prices are, you know, kind of continuous, like the next day could have also experienced a 58% crash. The next day could have experienced a 58% crash. You know, we can actually average all the days a 58% crash happened and average how many days it took that. And in my website, Lofi-Ledger.com, it's free again if you guys want, shameless plug, there is actually that exact graph. So this days to cross is actually that exact graph. We can decide a movement up or down, let's say down, and then we can decide a threshold. So we had a 58% drop or a 68% drop, I think is what we computed. So we can either do 60 and 70 because it's like the closest to them if you round up. So let's first do 60% drop. So if we do a 60% down, these yellow lines is all the points at which the price of Bitcoin hit 60% going down. And you can see some parts don't have yellow lines because obviously when it was here at like $6,000 per Bitcoin, there was never a time where it reached another 60% drop, right? So how do you read this chart? Basically, you read it as given this price, so let me just hover. Given this price on March 27, 2021, when Bitcoin was at $55,000, it took 444 days later for it to drop 60%. So if we get this and add 444 days later, you would note that that price is around 60% lower than this price, right? And so you can do that for every price. So you can see that there's like different prices. So here also at $44,000, yeah, at August 18, when it was $44,000, it took 448 days for it to go down 60%, right? So all of these prices are actually prices wherein it took that many days for that price to reach a 60% drop, right? So how is this useful? What we can do now is actually we can average this. So down here is a summary of the averages. So on average, a 60% drop takes 282 days on average, right? And this is useful because if we say that from top to bottom, it's going to be at least a 60% drop. Top to bottom, 60% drop. We just have to add 268 days from the top, from the previous all-time high, to get the date wherein the next 60% drop would happen on average. So when was the previous all-time high? So if we look at here, the previous all-time high was over here. Let's say it was at September 29, 2025. So if we just put September 29, this is the month here. So September 29, 2025. So September 29, 2025. And then we add the average 282 days. A 60% drop, the next target date, would put us at July 8th, 2026. So it's actually already passed, right? If we make it a 70% drop, because remember the worst case was 40, and we do the same thing, September 29, 2025, that would put us at around August 13, right? So this one is saying that it's going to happen around August 13. September 13. Yeah, sorry. Brain not braining. But yeah, so basically the 70% drop is saying that it's going to happen on September 13. The 60% drop is saying that it's going to happen. It's saying that it had already happened, which obviously it hasn't happened yet. And these are averages. So like there's also a standard deviation of 100 days. So if you just add like 100 days to this, then it'll put you in October 16, right? So the standard deviation is 100 days, you know. So for a 60% drop, it's saying it should happen sometime between July and October 16. The 70% drop, it's saying that it's gonna happen at around September 13, right? So this one is analyzing all the 70% drop. It's saying that it's gonna happen in September. This graph is also saying it's gonna happen in September, and this is gonna happen in September. I actually made an article trying to explain all these concepts, and if you read it, TLDR, the final drop that all of these charts are converging into is, so like this first method is saying it's converging into October 25, the first method, and the second method is, you know, September 20. So somewhere between September to October is going to be really where we think that this 50K to 40K level will start to happen. So that's what I think so far is going to happen. Interestingly enough, July was positive. We came back from a bounce in June. June had this drop, and then we had this rally up. So now I think we're going to either go sideways and touch the band, and I think, yeah, we're going to make a decision somewhere in October, September timeframe. So yeah, that's where my thoughts are at. It's still exciting because, you know, the bear market is where most of the money is being made. If you get a good entry here, you'll get an easy 3x on Bitcoin, right? So I have a lot of dry powder right now. Gonna enter probably around September or October. If it doesn't happen by like October 10th, October 20, I'm probably already gonna buy. I think this is the highest probability play. And yeah, so that's all for this crypto market update. Again, we don't have to time the bottom perfectly. It's almost impossible. What we're trying to do here is to give us an idea on the approximate dates where we should consider actually investing, and also an approximate price range on what is exactly good value, right? And just to drive this home, this is another chart that we have, which is the expected values. And if we go to 2-year, historically, Bitcoin already has an average return of 104% at this risk level, right? The current risk is 0.3, right? The current risk right now is 0.3. This is where it is in the risk level. If you look at historically, 2 years from now, historically, on average, Bitcoin is up 100%, right? At lower risk levels, it's higher, right? If we go all the way down to 0.15, we get to go to 155%. So you also have to weigh your risk. Like, if you wait too long, then you're just gonna miss the boat. Like, but if you don't wait long enough, then maybe you risk the chance of losing better investment opportunities. So how do you navigate that? You know, you can never be sure. I'm not sure. Like, I can't tell you when to invest. The way I'm doing it is this buying strategy tab. So if you look at this buys tab, what we can do is actually distribute our buying. So for example, you just choose a risk level. You just choose a risk level. Um, so for example, you're gonna invest every time the risk level is below zero point 0.5. So just to reiterate, the risk level is just this line and where Bitcoin sits in this line. If it's below zero point 0.5, then it's under the fair value. If it's above zero point 0.5, then it's above the fair value, right? So the risk level, this price risk, is just whether or not it's above or below the average, and lower is basically farther from the average. You know, this buys is you just decide, okay, how do I split up my money? So if you just DCA, for example, below zero point 0.5 at an equal level, you would have an average buy price of 57K if it reaches all the way down to 40K, right? So the predicted bottom here is 41K, but if you just DCA every time below zero point 0.5, you would make an average buy price of 57K, which is only 38% farther from the bottom, right? But it doesn't carry the risk of waiting all the way until 41K, right? If you make it lower, like right now we're at 0.3, right? At 0.3, you make it equal allocation again, going down. Your average buy price would be 50K, assuming it goes all the way to 41K, right? So you're only at 22% away from the bottom, right? But you're not again risking again betting everything in the bottom, right? So here you can actually distribute your price ranges. You want to make it exponential, right? Um, so you're investing like more when it's at lower risk, or you want to make it linear. You're investing more, but you know the difference is more linear than exponential. The thing is, the more you weight it this way, the more you're betting that the price will go down. So it's really up to you how much you want to be near this average buy price by spreading out your orders. But the important thing to note is you need to know your strategy. What is the approximate time range? What is the approximate price target? And how are we spreading out our allocation so that we can get near the bottom, but we don't want to like bet all our chips that, oh, I'm only going to invest at 40K. You know, that's a surefire way to miss everything. Right, so it's important to have if else statements on, okay, if this happens, then I'll do that. Yeah. So I already invested some. I would say 20% of my dry powder I already invested. Typically, I would invest probably like below zero point 0.4, and then I'd probably just do equal, right? That way I wouldn't be so stressed on, oh no, did I miss the bottom or not? Because like at some point it doesn't super matter if Bitcoin does eventually hit 200, 300K. Like the difference between a 4x and a 5x isn't that different, right? So that's where my thoughts are at. Yeah, all these charts are free if you guys want to use it. I'm also making a mobile app, Lofi-Ledger. It's going to be in the iOS store. So if you guys want to check that out, I'll probably have more updates on that in the future as well. Yeah, so if you guys like this, like and subscribe, and I'll see you guys next time.